Hello and welcome to this contender session covering Market Structure Part 2. Before we begin, it is important that you read through, understand and accept the trade disclaimer, as everything I'll be covering in this session is no financial advice and for educational purposes only. Market Structure Part 2. I'll be covering the utility, moving on to the implementation, and I'll be ending with some tips and tricks. Utility. Part 1 of this market structure series covered the question, where is the market trying to go? In this session, we'll explore the question, is the market doing a good job in its attempt to go this way? As a trader, it's our responsibility to identify shifts in the market early on, aiming not only to protect your assets and trades, but also seize opportunities arising from sentiment changes. Learning this skill enables you to navigate through the dynamics of the underlying asset you are trading. This provides you with a competitive advantage, positioning you ahead of the curve compared to other traders. Implementation. As a reminder, Part 1 covered the attempted direction of an underlying asset by identifying its market structure, and with that answered the question, where is the market trying to go? Let's now delve into the question, is the market doing a good job in its attempt to go this way? You can undertake 3 steps to assess the directional performance of an asset. Combining all 3 allows you to attain a holistic understanding of directional performance. The first step is to define attempted direction. This is what you have learned in Part 1 of distinguishing whether a market is trending up, trending down, or trading within a consolidation range. Secondly, you must evaluate trade facilitation based on volume. And finally, you must determine the success of that trade facilitation according to its impact on the value area placement. Now, we are going to investigate each step of the way. Step 1 is going to be defining attempted direction. This, as you already learned in Part 1, is referring to market structure and has 3 potential structures, being an uptrend, downtrend, or a consolidation range. Let's briefly recap how to identify attempted direction using a practical example. Using the Bitcoin chart as an example, you can clearly identify an uptrend. Here we can clearly see price is making higher highs, higher lows, followed by another higher high, higher low, higher high, higher low, and another higher high, which is a clear uptrend. We can now move over to the step 2 and evaluate trade facilitation based on volume. Once you have identified the attempted direction, you should use volume as the primary means of determining directional performance. High volume during a break of previous swing high or low can confirm the validity of a move, while low volume may suggest a lack of conviction. One thing you can do is monitor previous days transacted volume and see if volume is increasing, decreasing, or staying within a trend. It is recommended that you gather stats of volume to be able to detect any significant deviations from the current average. Okay, let's delve into a practical example to illustrate this concept. In this instance, we are examining the same chart where we identified an uptrend on the Bitcoin chart, adding in a volume indicator. It's evident that with each breach of a previous swing high, the volume is on a clear upward trajectory. This suggests that the market is successfully facilitating trade with the buyer, and we can categorize this as a strong and healthy uptrend. A straightforward trend line can serve as a visual tool to help spot and confirm this pattern. Once you analyze the trade facilitation based on volume, you can move over to the third step, which aims to determine the success of trade facilitation according to its impact on the value area placement. I particularly use this method on the 30-minute volume profile, judging a medium time frame trend. A structural indicator that you can use to better refine the level of directional performance is the value area placement. By examining how one day's value area relates to the next, you can progress beyond simply determining if the market is doing a good job to how good of a job it is doing. If attempted direction is up and volume is healthy, what impact does that have on value? In this step, the goal is to address the question if buyers were successful in placing value higher and how successful were they. The same method can be used for a downtrend as well. For the sake of visualization, I stick with using an uptrend as an example. Here is an example of analyzing the success of trade facilitation according to its impact on the value area placement. Looking at this example, we can clearly see that a value is being built above previous day's value area, indicating successful trade facilitation at higher prices. So here, that is our first reference, and we can see on the next day, value is placed higher. Again, on the next day, we can see the volume profile or the value area is higher as previous day's value area. The same for this day and the next day as well. So this can be categorized as a very strong and healthy uptrend. There are three different relationships between one day's value area to the next. Value can form clearly higher or clearly lower, exhibiting obvious and strong directional performance. Value can overlap to one side or the other, indicating a lesser degree of conviction and change. Value area can also be contained entirely within the previous day's value area, which is known as an inside day. Let's illustrate these three different relationships using practical examples. First, we are looking at value clearly forming higher. Looking at this volume profile allows us to see that a value is clearly forming higher compared to the previous day's value area, exhibiting obvious and strong directional performance. Next, we must have a look at value that is overlapping to one side or the other. Looking at these two volume profiles allows us to see that value is overlapping to the upside, indicating weaker conviction of price moving to the upside. This pattern can be particularly helpful to identify trend shifts early on, which I will cover later. Okay, so here the follow-through is not as strong as in the previous example. The last relationship is whether value is contained within previous day's value area, known as an inside day. An inside day where value is forming within previous day's value area suggests a period of consolidation and indecision in the market. If an inside day occurs within a trend, this may suggest that conviction is slowing down and you should be alerted for potential trend shifts. Examining value area placement can be particularly useful for you to identify early signs of a shift in the trend. Let's now have a look at early signs of a trend change. Here we can see that price was in a downtrend. Okay, we're making lower lows and lower highs, and judging directional performance, we can see that value was placed lower. Okay, looking at this volume profile, it was clearly lower compared to the previous day. Here we can see that on the following day, we had an inside day. This means that directional conviction is slowing down, and we as traders should be alerted for a potential market structure shift. On the next day, we can see that price is forming overlapping value area to the upside. This again shows that the market participants are no longer interested in shorting. Value is, after this downtrend, for the first time building higher. And this was the start of a nice uptrend where we see that value was once again overlapping to the upside. Another day where value was overlapping to the upside. And here we can, somewhat see it here, that value was placed entirely above previous day's value area. Let's now discuss the different relationships. I'm not going to cover every single one, but you should really study each and every relationship. Here we can see attempted direction is up, relationship with volume, with a higher volume, and relationship to the value area. So in an uptrend, higher volume, value area is also placed higher. This means that directional performance is very strong. You can now go through the different relationships. Let's also look at an example for a downtrend. When attempted direction is down, volume is higher on the way to the downside and value area is placed lower. The directional performance is also very strong. You can now again pause the video and study the remaining relationships. Let's now move over to some tips and tricks. It is necessary that you synthesize all elements of direction and performance to arrive at a holistic market understanding. While this serves as a solid foundation for evaluating directional performance, you can enhance your analysis by incorporating additional factors such as the market profile. A good tail indicates conviction to drive price in one direction. Allow yourself time to thoroughly explore the integration of these methods. Thank you for watching. A live stream covering questions and answers about this session will be hosted. You can submit your questions for this live stream via Discord in Sessions Questions. For additional Q&A, head over to the Trading Help forum in Discord. Goodbye.